Welcome to the Chart of the Week. My name is Pete Stolzers, and I have a systematic approach to trading options. If you haven't viewed the videos that explain my approach, please do so now. I produce the Chart of the Week so that prospective customers and subscribers can sharpen their pattern recognition skills. For more information about my research, please visit www.oneoption.com. 75% of all stocks follow the market, so that's where my research starts. First, let's take a look at what the market's done over the course of the last 5 days. It doesn't take us long to realize it's been a pretty nasty week. We can see that the market has had a steady sell-off for the last 5 days. A week ago we started at SPY 138, and I used the SPY, it's 1/10 of the value of the S&P 500 futures. It started at 138 and it gradually but persistently drifted down to below the 132 level, and that's significant because it broke the SPY 133 support level along the way. That 133 level represents the low from March of 2007 and August of 2007. So that was a very significant horizontal support level. We can see that the market opened lower today on a gap, and it consistently sold off during the first half of the day, and it looked like things were going to get very ugly until finally into the close we got an intraday reversal. Tomorrow we'll see if there's something more to this. The backdrop right now is that all the economic numbers have been coming in very weak. We had a weaker than expected GDP, weaker than expected durable goods orders number, we had very hot PPI, we had additional woes in the financial sector, a downgrade in Citigroup, and also consensus that there would be additional write-downs. A lot of headwinds for the market right now to deal with, and there really hasn't been much in the way of positive news. As we take a look at the 1-month chart, we can see that 133 level here, where it was tested again, and then now it's tested again. When I did my Chart of the Week video last week, it looked like we were going to get a bona fide bounce, and we were going to challenge that 139 SPY level. But we can see as we hit up against that resistance, the market failed miserably and sold off very quickly. On a 1-year chart, we can see how the market rallied last year, made a relative low in August, made a new all-time high, and then since the October high, the market has been in a very steady sell-off. Recently, we found support. We have 1, 2, 3 times that SPY 133 support level has been challenged. At this particular time, my market bias is neutral, although I will say I have a slight bearish tone to it. My reason for that is we have additional economic numbers coming out this week. We have the unemployment report, most importantly, coming out Friday. The jobless claims numbers on a week-to-week basis have been on the rise, so I am expecting a fairly weak unemployment report. Given my slightly bearish bias, I decided to take a look at this particular search. It's called EDRE breakdown. It's a bearish day reversal early. That's the longer term pattern that we're looking at. We're looking for a stock that's been in a longer term downtrend, has had a small bounce, and now that bounce is being reversed, and it looks like the stock is going to continue its longer term downtrend. The setup we're looking for is an actual breakdown, a breakdown below the 10-day low. So to recap, we're looking for stocks that have been in a downtrend, have recently rebounded, and today the stock is attempting to resume the sell-off, and it's making a new 10-day low. This is my scanner, and here we can see at the column heading EDRE breakdown. So this tells me that these stocks conform to that particular class and setup. What I'll be doing is I'll be clicking on each one of these symbols, and we're going to flip through charts, and we're going to use our pattern recognition skills to see if we can find a very interesting candidate on a technical basis. This stock started the week off with a gradual grind lower, and then we had a huge breakdown. Stock finished near its low of the day, but here we can see that it dropped from $23 down to $14. I'm not even going to take a look at another chart because I know that this move has been so dramatic that I don't want to get caught in a short covering bounce. I think there will be better opportunities for us. Here we have a similar situation where the stock's in a very tight trading pattern. It drops from $20 down to $14, lost 25% of its value today, closed on its low. This stock's not going to be of interest to us, but just for the heck of it, let's take a look at the one-year chart. And here we can see that once the stock broke through this support level at $26, it's been a very nice short. So if you caught it in here, you're real happy today. This stock actually looks a little more promising. We can see that it actually rallied a little bit 4 days ago, and then since then it's been in a steady sell-off. And then today we had a big drop early in the day with a small rebound near the close. On a 1 month basis, we can see the stock's pretty choppy. It did come down to the $70 level and it broke that support level. So on the longer term chart, it'll be interesting to see how significant that $70 support level is. Once it broke that, it moved down very quickly. Here we can see that the $80 level was actually a significant support level. Stock hasn't done much. In a choppy fashion, it did have a peak last fall, and then it fell very quickly after that. So this breach of the $80 support level I deem as very significant. We can see how weak the stock has been. There's a small bounce, and that would be one reversal. There's another small bounce. There's another reversal that the scanner would be picking up on. So this looks like a pretty decent candidate. It seems like we're picking up a lot of these stocks. Again, a fairly tight trading range with the stock drifting lower and lower and lower, and then bam, we get the huge gap down today, apparently earnings related or news related. The stock loses about $4 or 25% of its value in 1 day and closes near its low. Again, we'll take a quick look at the one-year chart. This is a beautiful chart pattern. You can see how persistent the selling has been. Every one of these little bounces has been met by early selling, and that's what creates that nice tight channel downward. So this has been a great short, and it's been a great short from the support levels that were broken up here, but for our purposes we're going to leave it alone because it's fallen so far.